let's talk about the impact of the recession on most traditional investors. The Carlton Sheets investors out there. What's going on? Well, obviously banks aren't lending, right? There's no financing out there. When they do lend, what's happening is they're no longer allowing seller-financed equity closing costs, second mortgages, seller equity contributions are getting kicked out. Credit scores have to be more than perfect. Banks, used to look at the property. Now they're looking at the borrower and they're looking at the property. Consumer debt is essentially frozen right now. Credit card limits are getting reduced. Then you start looking at the mortgage defaults that are going through the roof. The government response, as we all know, has been totally inadequate. It hasn't stopped. If anything, it's gotten Joe Sixpack even angrier, and so he's stopping paying his mortgage because he wants a bailout. And so you've got even more people now that want a bailout. That's causing ripple effects. Obviously, job losses are huge. We'll talk about that in just a second. Unemployment skyrocketing. Property values are plummeting. And within all of this, what does it do, folks? It creates amazing opportunity, and it is the biggest buying opportunity ever. But what is the foreclosure mess right now? Well, right now, there are 3.1 million people in foreclosure. That's an amazing number, and there are more headed to it, right? But those are actually the people that have already received their foreclosure notices. There are 861,000 people last year, over 861,000 that actually lost their homes to foreclosure. Then let's take a look at actually how many people are behind on their payments. There's an estimated 12% of everyone with a mortgage is at least 30 days behind. And then you look at just the employment rolls out there. Last month alone, the United States lost 697,000 private sector jobs, folks. That's almost 700,000 jobs in 1 month. Now, it gets a little even scarier if you start looking at the mortgage market, because a lot of the relief we hear about and bailouts and this and that, that's all related to what? To homeowners that have a house that they own. But did you know that 15% of all of these mortgages are non-owner occupied? That means they're investment properties. Well, guess what? Those have a much higher delinquency rate, and we're not even hearing about those on the news either. So then you add to the fact that 20% of all loans are considered whole loans, and you say, well, what is a whole loan? Well, that means that essentially 80% of all of the loans out there have more than one lender on them. You say, well, what is that all about? Well, most people were buying 80-20 loans to avoid PMI and get 100% financing, and now we've created this mess that we're in. Well, what that does is it creates a huge opportunity for short sale. Not just loan modification, because loan modification is extremely, extremely difficult when you're talking about two different lenders. You've got Countrywide on the first and Option 1 on the second. Well, Option 1 is going to have to be willing to release their lien. They're going to have to be paid something. And so if it's just a typical loan modification, it doesn't get done. And that's where short sales come into place, and that's where you can use some of the skills we're going to talk about tonight to your advantage in a real meaningful way. The only other way around that is through what are called cram downs, which may be coming down the pike, but that's for people that want to file bankruptcy, and we're not even going to be talking about those folks right now because they're in a whole different set of problems. But let's get into the overall proposition that we want to talk to you about, because we understand that money is not exactly falling from trees right now. There are a lot of people that are simply flat broke. And so they look at investment opportunities and they say, you know what, I can't do that because I am absolutely flat broke. But what if we showed you a system where you could make money and the amount of money that you currently had in your pocket was totally irrelevant? And what if we showed you something where your credit score was unknown and totally irrelevant? What if your ability to obtain financing was irrelevant? What if your current income or lack of income was irrelevant? What if your job status, whether you're even employed, was unknown, totally irrelevant? What if you just filed for bankruptcy last week? What if that was totally unknown and also irrelevant? And what if the current foreclosure that you may be in yourself is also unknown and totally irrelevant? Well, that would pretty much get you excited, right? But then if you actually look at the opportunity itself, what if you didn't have to risk any of your own capital or lack of capital? And essentially, if you didn't have to hold the property for more than 24 hours, if you essentially bought low and then you sold fast. You essentially had quick cash in and quick cash out.